Today, let's talk about investments. Traditionally, when we touch on the topic of investments, we think about fixed deposits, we think about the family heirloom in gold and silver, and of course about real estate. But it is an emerging world today, right? The investment spectrum has moved on from these basic investments to newer types of investments. Initially, it moved into listed equities and bonds, which were typically purchased as directly or as mutual funds. But right now, we are seeing an evolution of startups. And we typically classify these as alternate investments. So what are these alternate investments? They include investing in startups, either directly as angel investors, or as groups through angel networks, or as venture capital funds, which are designated as alternate investment funds. Why should we invest in startups? Startups are going to create the employment that the country basically needs. It is innovative, we are building new technologies, and they are going to create employment. And it is all the rage today. Several startups in India have achieved unicorn status. By unicorn status, we mean they are worth at least $1 billion United States dollars. Now, as much as alternate investments could sound sexy and attractive, they come with risk. By their nature, they are riskier investments than an investment in listed equities because investments in startups are not liquid. And there is every chance that some of your investments will not see the light of day and therefore result in losses. So it requires a lot of care before one makes investments in startups, whether directly as an angel investor or through alternate investment funds. So there is a requirement that when you make such investments, proper due diligence and assessment is made before you sign the check. It is also important that you manage a diversified portfolio of such investments, as some may fail, but those that succeed should be able to cover the losses that you make on those failed investments. There are many ways in which investments into startups take place. As I have mentioned, angel investors are one such category, but there are also other categories of investors into startups. They could be high net worth individuals who invest as angels. There are also multi-high net worth family offices that combine capital to invest in startups. In addition, a phenomenon that we see a lot in the United States and slowly emerging in India are CVCs, or capital venture capital, or corporate venture capital. Corporate venture capital are basically startup investment arms of large corporates because they are looking for the next stage of growth, the new investments on which they can exploit to build further businesses. It is important to realize that investing or making angel investments is a risky bet. Hence, one needs to be careful when making such investments. Why are they risky? We are taking a bet on very early stage companies where product market fit or the resilience of the innovation may not yet be tested. However, studies show that over the long term, investments in early stage companies will yield a much higher return than capital market returns. But such investments needs to be undertaken with care, which is why due diligence is important, diversification of investments is important, and most important is to make sure that post-investment, we monitor how these startups perform. And a good idea is to have a quarterly business review together with the startups that you have invested in. And it therefore helps if you invest as a group rather than as an individual. Investing in capital markets is often very attractive because investing in liquid stocks and bonds is by definition liquid. So whenever we need the capital, we can sell it. Also, the markets are regulated, especially in India by SEBI. The price at which it can be bought and sold is transparent. Now, compared to this, investing in alternate investments is less transparent, less liquid. However, the reason for still allocating some portion of your capital to alternate investments is to take advantage of the fact that studies show that alternate investments on average generate a yield 2 to 3 times that of capital market investments. Hence, it is worth studying the alternate investment space, startups in India, and allocate some of your capital towards alternate investing. So we do see the trend of alternate investments in India today. If you go back maybe a decade or so, we would hardly hear about investments into startups in India. But today, it is happening everywhere. It is even happening by way of entrepreneur training at colleges in second and third tier cities. And this is necessary because startups do have the ability to generate employment across the board. Even though there are risks associated with alternate investments, there are therefore also huge benefits. They do help create wealth in the nation.